Hello, everybody. Welcome back to the Crypto Sherpa Show, where I cover the latest cryptocurrency news articles to keep you up to date on what is happening in that crypto space. And happy Tuesday. Hope you're all having a great start of your week so far. And yeah, let's take a look at Bitcoin. What's going on right now? We were going up 70,000, but then looks like we started dipping again. So I did not hold that. We're currently sitting at $67,594. How are people feeling fear-wise? They're being less fearful from last week's all-time low when we're at a fear index of 5. Today we're at a 13. And do I have technicals up here? Let's see. BTC full-on summary still showing sell with oscillator showing neutral. Is that the RSI strength index? Is at a 35 right now? And then the moving average is still a strong sell as well. So Bitcoin, I think, can still keep going down a little bit. It did not hold it. We need, like, as I was listening this morning to a lot of the other influencers, we really need like a week-long green candle to go through to really maybe see something. But right now, Bitcoin is just, it's still fighting that level and just slowly doing a slow bleed. So, and my predictions are for price-wise, I kind of know, could go to 60, could go to 50 or 45. It's going to be one of those, but that's where I feel the true bottom is, and then we start making our way back on up. But yeah, so that's Bitcoin price news. What else is going on in the space? I thought this was pretty cool about like the robots and how fast they're evolving, like literally in just a year's time span. China, I guess they're having it's the Chinese New Year this year, and they showcased like a 2025 robot they had last year that could like barely move at all to this year's 2026 model. I just want to share that with you just to show you how fast technology and just technology is evolving. So here, let's play this really fast. Dang, look at those robots. But yeah, so these ones down here, yeah, can barely move. That was last year. And look how fast they've upgraded. Literally human-like dancing going on. So yeah, technology is booming very fast. Robots are coming. And if robots are going to be using a lot of stuff for us, they're going to need a digital currency. And I feel that's where Bitcoin comes to play and cryptocurrencies. Like robots aren't going to use fiat cash. They need something digital. And so it just makes perfect sense. But yeah, so everything's moving really fast right now. And like that's how it's been since the technology first even ignited, from sticks and stones to the fire to electricity, a light bulb, computer, or yeah, moving cars, computers. Now we got the phones in our pocket, they're on our wrists now, and now we have a digital currency. So like technology's evolution is happening very fast. So even though we have a slow dip going for Bitcoin, like I believe we can have a turnaround. Like we've seen it before, like the turnarounds in cryptocurrency, how high these pumps can actually go and how fast they happen. So I'm not worried. I'm just looking at I'm looking for where I want to get back into it. Well, now I'm into it. I'm looking at that low point where it's the best buying opportunity because I know we're going to go back up. But yeah, I just want to show that with you, and just like how, yeah, it's just the robots crazy, right? But let's see. Let's go back to the crypto news. What's happening? Oh, yes. Remember how yesterday I was saying like Strategy was showcasing another crypto bubbles chart of purchasing Bitcoin? I want to know if Saylor or his company Strategy actually bought the dip, because usually he's always buying so high. But it looks like they acquired 2,486 Bitcoin for $168.4 million at a price of 67,710 Bitcoin. Bravo, Michael Saylor. Strategy actually bought the dip, because that was a joke going on for some time now. Like this was your 99th purchase, and like out of a handful of those weekly purchases of you done, it's like always buying the top and never the dip. So he got it. So yeah, MicroStrategy is still adding their pile. Nothing stopping them. I saw El Salvador added another Bitcoin to their daily Bitcoin spending. So that was pretty cool. So yeah, Bitcoin's still being bought up out there by the big players. But we get a stark warning from Bank of America. So Wall Street is shorting the dollar at record levels. Investors are now the most bearish on the US dollar since 2012 per Bank of America. Now, historically, a weaker dollar boosts Bitcoin, but recent data is showing Bitcoin is moving with USD. So if that holds, a dollar drop may hurt Bitcoin. So Bank of America is being speculative about this. Like we're always wondering like when Bitcoin is going to depeg from like dollars pricing, or it matches it, then it doesn't, because people would always say it's also matching stock prices and whatnot. But just they're seeing similarities right now showing that they're just wondering, because we're about to get like a huge injection of liquidity. So you make more money, or they print more money, the purchasing power goes down of the dollar. So if Bitcoin's following that, Bitcoin's price would go down, which it should be the total opposite for Bitcoin for how it's created. But yeah, so the Fed will inject another $16 billion in the economy this week. One happening today and the other on the 19th, so on Thursday. And looks like they still got more happening this month. So another 16 on the 24th and the 25th. So that's quite a bunch of liquidity entering the market. So hopefully Bitcoin moves away from it. And this is bullish news, because usually it would be bullish news for Bitcoin. And I kept this one in here. So yeah, and like, why are we collecting Bitcoin too? It's all about generational wealth. Like, and when people say that, it's like, what do you mean? So this guy really explained it well. It's like your dad buys Bitcoin for $100,000 down the future in the far future, or could be soon, you never know. But it grows to $5 million. If he sells, he owes taxes on a $4.9 million gain. So instead, he's going to put it in a trust, borrow against it, and then he lives tax-free, and he dies holding that Bitcoin still. And then the kids inherit at a $5 million basis, and the IRS gets $0 because there's no taxes when you borrow against money. And so this is how you're doing it for your So when we say this is for generational wealth, this is how the plan should be for you. If you're saying for your kids, you buy a Bitcoin, you put it in a trust, and then as that grows over time, you borrow against that for other cash flow projects. But this is exactly what they mean about this, about we're saving Bitcoin to give our kids a chance they never had before, really. So yeah, so I thought that was cool seeing this tweet out there. But let's dive into the news now. Like the title of the show is, did you get that fake newsletter from Trezor or Ledger? So yeah, so be aware of this phishing scam happening right now. People are actually getting physical letters in the mail from Trezor and Ledger, probably saying, we're going to go through this article, but probably saying their victim's hardware wallet is compromised. We need to keep you safe. And they'll probably have a QR code on there. We'll go through this article just to show it to you. But just letting you know, if you got an actual physical letter from Trezor or Ledger, just throw it away. That's a scam. It's trying to steer you away to steal your seed phrases. So again, nobody will ever ask you for your seed phrase. That's your number one rule when you're in cryptocurrencies and you're actually self-custodying your assets, is you never give away your seed phrases to anybody. The only time you need to bring out your seed phrase is if you forgot your passwords to your wallet, or the device your wallet was on is broken and you bought a new one. Those are the only two times that seed phrase should ever see the light of day. Other than that, it should just stay safe and hidden and protected wherever you may have it. So just be aware that there's a letter going on and they're probably phishing for those seed phrases off of you. But let's go through this article and just see exactly what the letter looks like and what they're trying to get. So it's not the first time scammers have used snail mail to target victims of hardware wallet company data breaches from years ago. So this could have been from a data breach a long time ago, but it's still happening. So users of crypto hardware wallets Ledger and Trezor are again reporting receiving physical letters aimed at stealing their seed recovery phrases. Yep, so that's what they were stealing. The latest attack on users that has been exposed in numerous data leaks over the past 6 years. Now, cybersecurity expert Dmitry Smilanets was one of the first to report receiving a spurious letter from Trezor on February 13th, which demands users perform an authentic check by February 15th or risk having their device restricted, which they cannot do out there. So that's obviously the fake scam. Now, Smilanets said that the scam uses a hologram and a QR code that leads users to a scam website. The letter is made to appear signed by Matej Zak, who is described as the Ledger CEO. Now, the real Matej Zak is the CEO of Trezor. Now, so again, the misinformation on there, it's claiming to be Ledger CEO, but he's really the Trezor CEO. So just again, this is how you can spot that this letter is an actual scam. It's inaccurate. Now, a Ledger user reported receiving a similar letter last October, claiming that recipients must complete a mandatory transaction check. And here is that newsletter. Guys, do not scan this QR code because it'll take you to the fake site. And if you do, that's on you. But this is exactly what it looks like. So it was being shipped out. Reminder of the authentication check. And then this will become mandatory part for all these models and then so on. And yeah, here's the urgent request, because a lot of scam and phishing emails are trying to stress urgency on you. It's like you have till this deadline, otherwise your crypto's gone and lost forever. So they're trying to get you in panic mode to make a mistake and make something that you wouldn't usually do. So yeah, so everything of a scam is in this. So yeah, if you get one of these letters, just toss it away because it's a scam. But scanning the malicious QR code for mandatory checks, the QR code reportedly leads users to a malicious website designed to look like Ledger and Trezor setup pages. tricking them into entering their wallet recovery phrases. Now, once entered, the recovery phrase is transmitted to the threat actor via a backend API, allowing them to import the victim's wallet to their device and steal funds from it. Now, legitimate hardware wallet companies never ask users to share their recovery phrases through any method, including website, email, or snail mail. Now, no slowdown in crypto scams in a bear market. Asked whether crypto scams could see a decline whether a crypto market slump. Now, Duddy Lavid, CEO of cybersecurity firm Cyverse, told Cointelegraph that historically, crypto scams don't decline in bear markets. They just evolve and adapt. Now, when speculation drops, opportunistic hacks may slow, but social engineering and impersonation scams often increase, he said. Now, in downturns, users are more anxious and more reactive and more susceptible to fear-based tactics like fake compliance letters or wallet alerts. Now, this isn't the first time letters have been sent out. Ledger and its third-party partners have suffered multiple large-scale data breaches over the past few years, resulting in leaks of customer data, including physical addresses used for postal purposes and physical threats. Meanwhile, Trezor flagged a security breach that exposed the contact information of nearly 66,000 customers in January 2024. And then in 2021, scammers mailed counterfeit Ledger Nano hardware wallets to victims of the 2020 Ledger data breach. Now, physical letters prompting victims to scan QR codes were sent in April of 2025, while in May, hackers used fake Ledger Live apps to steal seed phrases and drain crypto from victims. So Ledger alerted users to physical mail phishing on its website in October. And yeah, so these are literally like just the history of types of scams that happen. This isn't Trezor or Ledger's fault. So I still use a Trezor myself. I still trust Ledger. I like my wallet. I'm aware of the scams out there, so I don't fall for them. I make sure my seed phrase is safe and protected, and I treat it as a cold wallet. I never log on to it. It's just there in a safe place. I have the public address to that wallet. If I need to send money to it, I will. The only time I'm ever going to actually pull that Ledger out is if I need to move some money off of it, but that's it. But yeah, so these scams are always going on. It's not Trezor or Ledger's fault other than the data breach they did have back in the day, but your wallets are still completely fine. The only thing these scammers, the scammers out there have is like the information you use when you purchase your wallet, because you always want to buy your wallets like off of the official platform itself, website, never any third parties. And then when you do that, you gotta put your name, email, your address where you sent your shipping address to receive it, and that's the information they have. They don't have any seed phrase or access to your wallets out there, so just be aware of that. But but because of that, that's what leads to these phishing letters, the phishing emails out there. And what are some other ones that they said that do happen out here? I think that's it, other than some fake updates too with the emails. But that's how these phishing emails go out there too. Like they can target people who did purchase a Ledger or a Trezor device out there, because this past information is on. So yeah, so just be aware out there. Be safe, guys. Your Trezor and Ledgers are still safe right now. Just there's a physical letter going out there. If you see it, throw it away. So yeah, so sorry for the first starting off of the bummer news out there, but hey, this is for safety and to keep you guys safe as well. But let's go into an interesting article on, if you didn't see it yesterday, Logan Paul sells a Pokemon card for $16.5 million. And this happened years after he actually fractionalized the NFT of that Pokemon card. But I guess there was some situation that happened. I think it went down. He accredited his people back, but some people I don't think got it. So the profits will go all to Logan Paul. But let's go through this article to hear about this Guinness Book World Record of a sale of a Pokemon card, which it is crypto related because of the NFT aspect. So Paul once fractionalized ownership of the rare Pokemon card on Liquid Marketplace in 2022 before the website went offline, leading to a lawsuit as investors demanded returns. So YouTube star Logan Paul has set a new Guinness World Record selling his rare Pokemon card for nearly $16.5 million on Monday, the most expensive card sale in history, though the new record sale didn't come without controversy. The auction for the Pikachu illustrated Pokemon card, one of 39 created in a competition in the 1990s, was won by A.J. Scaramucci, the son of American financier Anthony Scaramucci, outbidding several others who made offers in the 7- and 8-figure range. Now, Paul is believed to have made an $8 million profit after auction fees on Monday. He bought the card for $5.3 million in July of 2021. So, okay, that's a 3.3, no, never mind, $2.7 million profit. Now, here's the Guinness World Records tweeting about the record being broken. So, Logan Paul's rare Pokemon card becomes the most expensive one ever sold in record-setting history. The PSA 10 Pikachu Illustrator card went on sale via Golden Co. and eventually sold for $16,492,000. And here is that card that he did wear around his chain for some time, and he's wearing it right there as well for one final moment. But however, the record sale reignited criticism over Paul's move to fractionalize ownership of the card on Liquid Marketplace back in 2022 before the platform went offline, leaving investors scrambling for returns and prompting a lawsuit in Canada. Now, in a post to X on Monday, Delphi Labs general counsel Gabriel Shapiro said Paul's Pikachu NFT fractionalization fiasco is a classic case of slop tokenization. What is slop tokenization? Well, the token is basically just juxtaposed with property, but has no rights to it, Shapiro said, urging investors to read the terms of service and to stop rushing into legal scams. Now, Paul addressed the criticism, stating that Liquid Marketplace went offline for reasons beyond his control, and that once aware of the issue, he paid to restore the site so users could withdraw their funds. Now, only 5.4% of the card was fractionalized to owners who paid about $270,000, Paul noted. And here is the tweet. So, one epic night. I'm truly grateful for the Pokemon community, Ken Golden, and my teams making this last night of a historical moment. So I was addressing the cards, and then he addressed the regarding ownership history of the card. Now, here's the facts that Logan Paul said. So I had originally offered to sell up to 51% of the Illustrator on Liquid Marketplace, but ultimately only 5.4% of the card was sold for about $270,000 in the summer of 2022 to fractional owners associated with LM. Then in May 2024, I bought the card back for the same price. It was sold for per the terms of LM and made funds available for users to withdraw. I was told that those funds were available to be withdrawn for approximately a year after being deposited in the LM users' accounts, and many of the fractional owners did indeed withdraw those funds during that time. And for outside of my control reasons, the LM site then went offline. When I learned users could no longer withdraw their funds on LM site, I personally paid to get the site back up. Users are not able to withdraw their funds, and they have been at liquidmarketplace.io, and they were also notified via email. So people can still get it. If they said they can get their money back, or not their money back, I think when you bought the card back. So to get your portion back of it, you got to go to this site. I hope that's still up right now. I did not check. But Paul isn't named in the Liquid Marketplace lawsuit that was brought by the Ontario Securities Commission, Canada's top security regulator, in June of 2024. A hearing is scheduled for June. Now, Logan Paul's past NFT drama, it isn't the first time Paul has had to defend himself over his involvement in NFTs. His Crypto Zoo NFT project failed to deliver its promise of a play-to-earn game, drawing investor backlash and a class action lawsuit in 2023. Now, he set up a buyback program and eventually paid investors back after they agreed to waive legal claims, and the class action fraud lawsuit was ultimately dismissed in 2025. Now, other NFT investments by Paul have also flopped, including an anime-style digital avatar from the ON1 Force collection he bought for $635,000 in 2021. That is now valued at under $2,000. Oh, that is over $500,000 loss. Like, I'm glad I didn't get into the NFT craze. Like, only the real ones, like the ones that actually had use case to it, those were fun to get involved with. I loved it because it's like, oh yeah, NFTs on my wallet. Let me go to this website. Now I can watch this video, and I'm the only one who watch it unless somebody else has the NFT in it. So I've got some NFTs, but none of the art ones that were super overpriced out there. It was just like, nope, I see this going down. But I always did believe that at least 1% of the 99%, maybe even less, of NFTs out there actually had use case and utility and was being used for what NFTs were actually for, just tokenized property on a blockchain. So yeah, but the record Pokemon card sale also stands in contrast to the struggling NFT marketplace, which deals in digital collectibles. So while the NFT market started strong in the first 2 weeks of 2026, the total NFT market cap has since fallen by more than 50% from 3.2 billion to just 1.55 billion amid a broader market pullback. Now, last month, NFT marketplace Rodeo and Nifty Gateway announced in the last week of January that they would wind down operations, adding to the sector's string of high profile closures. So, yeah, so NFT markets aren't doing too hot right now. I've seen like in the past a couple influencers out there, like other YouTubers in the crypto space, like actually still believe in some NFTs out there, thinking there will have a comeback. My personal opinion is I don't think so, unless they actually have a true utility behind it and it's not just a JPEG on some blockchain out there. So that's my thoughts on that. But yeah, Logan Paul made the Guinness record for selling the most expensive piece of cardboard ever. And that's right. I always made that joke. Me and my buddy always had that joke. We used to collect Yu-Gi-Oh cards, Magic the Gathering cards, spent so much money on them, and eventually it just turned into, this is just cardboard. So very pricey cardboard. And did I have a Twitter post about that? Oh yeah. So this is a guy who actually bought the card off of him. So the guy who bought Logan Paul's Pokemon card for $16.5 million says he's on a planetary treasury hunt and is going to buy a T-Rex dinosaur fossil and the Declaration of Independence. And is this Anthony Scaramucci's son? Is that who it is? Let's see. Who is this guy? Grox, I'm going to ask that. AJ Scaramucci. Yep, a venture capitalist and son of financial Anthony Scaramucci. He bought the Pikachu Illustrator card, so who knows? Maybe one day, depending on where this world goes to, he does get the Declaration of Independence one day and his T-Rex dinosaur fossil. So that is one pretty intense collection he's got. So there you go. So that's Logan Paul selling his Pokemon card. Now let's go on to, do I have 2 more articles? Oh yeah, so I got 2 more articles. Okay, so next up, looks like Monero, the privacy coin, is still holding strong despite its delisting from Binance and Coinbase. So this coin doesn't need to be on the exchange to survive. So let's go through this article to hear about it. So TRM Labs reported that Monero's on-chain activity stayed stable in 2024 and 2025, even after major exchanges removed support. Now, transaction levels remained above pre-2022 averages despite delistings from Binance and Coinbase. The data shows that Monero continues to record steady use during a period of tighter oversight across the crypto sector. Now, on-chain activity remains elevated. TRM Labs stated that XRM activity on Monero remains above the pre-2022 levels despite enforcement pressure. Monthly volumes moved up and down, but overall usage held firm. Activity since 2020 shows a clear shift to a higher base level. Now, several centralized exchanges have delisted Monero in recent years. Reports indicate that more than 70 platforms removed support in 2025 alone. Even with fewer trading venues, on-chain transfers did not record a lasting decline. Now, the delisting from major exchanges, Binance and Coinbase cited compliance and monitoring concerns when they restricted Monero trading. Liquidity moved to smaller or offshore exchanges. As a result, trading conditions became tighter compared to Bitcoin and Ethereum. But still, usage continued among those seeking privacy features. TRM Labs reported that 48% of new darknet markets launched in 2025 support only XRM, and this share marks an increase from earlier years and reflects changing preferences in certain online markets. Now, the ransom demands versus actual payments. The report said that ransomware groups often request Monero and may offer discounts for XRM payments. However, most completed ransom payments still occur in Bitcoin. TRM Labs wrote that most ransomware payments still occur in Bitcoin because liquidity matters. Bitcoin remains easier to buy, transfer, and convert into large amounts. Now, broader exchange access continues to shape the settlement of choices, and yeah, exchanges have to they have to delist it because they are centralized, and since Monero is a privacy coin, it just does not align with them. So it makes sense, but again, it's not slowing them down because people still like privacy aspects and they don't need to have a centralized exchange to use it. So this leads to the peer-to-peer network findings. TRM Labs also reviewed Monero's peer-to-peer network structure. Researchers found that 14 to 15% of reachable peers showed non-standard behavior. These patterns involve relay timing, handshake activity, and network distributions. The firm stated that Monero's cryptography remains strong and noted that the network behavior can influence real-world privacy assumptions. That study described observable patterns and did not assign intent to specific actors. So yeah, so Monero is still holding strong. There's a handful of privacy coins out there. Like, I don't own any of them, but if I were to choose one, it actually would be Monero. This isn't a marketing for them at all. I think Zcash is pretty good. I always like choosing the coin that's been around longer. And so Monero has been holding that. I think there was another privacy coin out there, Pirate Coin, or was it? Yeah, because it was like the privacy. So like there's a handful of privacy coins out there to keep your wallets safe, protected, and hidden out there. And yeah, people like that aspect of crypto and they want it, so that's why they still support it. So it doesn't matter if they get delisted from a centralized exchange out there. They're just doing what they're doing, which is being a privacy, hopefully a decentralized token out there. I gotta look more into Monero to see that. But yeah, so that's our Monero news. Now, lastly in the news, looks like there is a DeFi lender shutting down. So is this the second one? Did we have one last week? I forgot. But yeah, I remember something covering in that. But looks like DeFi lender Zero Lens shuts down and blames illiquid chains for the cause. So Zero Lens founder Riker says that several blockchains that the lending protocol operates on are now inactive, leading to periods where it has operated at a loss. And they got the sign, sorry, we're closed. So decentralized lending protocol Zero Lens says it's shutting down completely after the blockchain it operates on have suffered from low users, numbers, and liquidity. So after 3 years of building and operating the protocol, we have made the difficult decision to wind down operations. Zero Lender founder, known only as Riker, said in a post through a protocol shared on X on Monday. So despite the team's continued efforts, it became clear that the protocol is no longer sustainable in its current form, he added. Zero Lens focused its services on Ethereum Layer 2 blockchains, once touted by Ethereum co-founder Vitalik Buterin as a central part of the network's plan to scale and remain competitive. However, Buterin said earlier this month that his vision for scaling with Layer 2s no longer makes sense, that many have failed to properly adopt Ethereum security, and that scaling should increasingly come from the mainnet and native rollups. So Zero Lens operated at a loss due to illiquid chains, says Riker. Zero Lens Riker said that the reason for the shutdown is that several blockchains that the protocol supported have become inactive or significantly less liquid. He added that in some cases, Oracle providers, services that fetch data and are often crucial to running protocols, have stopped support on some networks, making it increasingly difficult to operate and markets reliably or generate sustainable revenue. Now, at the same time, as the protocol grew, it attracted greater attention from malicious actors, including hackers and scammers, Riker said. Combined with the inherently thin margins at high-risk profile of lending protocols, this resulted in prolonged periods where the protocol operated at a loss. He added that the protocol will ensure users can withdraw their assets, adding that we strongly encourage all users to withdraw any remaining funds from the platform. Riker said that some users may be locked on blockchains that have seen significant deterioration, liquidity, and Zero Lens will upgrade those protocols' smart contracts with the aim of redistributing stuck assets. So he added that Zero Lens has also been working to trace and recover funds tied to an exploit in February last year, where the protocol users of a Bitcoin product on the base blockchain were exploited after an attacker drained the lending pools. Now, Riker said that suppliers of the product affected by the incident will receive a partial refund funded by an airdrop allocation received by the Zero Lens team. Now, at its height in November 2024, Zero Lens commanded a total value lock of nearly $359 million, but that has since sunk down to 6.6 million, according to DeFi Llama. Now, the Zero Lens token has fallen by 34% in the last 24 hours in a reaction to the protocol shutdown, and has also lost nearly all its value since hitting peak of 1/10 of a cent in May of 2024. So yeah, so this platform's going away. If you got any money there, they're saying pull it out now. And yeah, honestly, if you have any of their token, I would transfer that now before any other losses do accumulate with it. So just be aware of that. And again, this also just shows like if you're building a application or something like on chain, you want to choose a strong one. But yeah, they chose layer 2s, but on Ethereum's blockchain, but they probably should just build it directly on Ethereum. But because again, the security wise on that and other stuff. But yeah, it just shows that you got to choose, like if you're going into a project too, like if you're not just building, if you're going into it, you got to pay attention to what chain are they on, because then you got to question yourself on how long is that chain going to survive. Is it going to stand the test of time, or is it likely to maybe fizzle out once we get like a bear market, like every time a bear market hits? So That's things you got to consider when you like maybe especially go into a DeFi lending program out there. So just be aware of that. That hopefully it's on a strong chain. But that is it for the news, guys. Yeah, sorry for no bullish news at all. There really wasn't anything other than strategy. Buying the dip. Let's see. No, Bank of America's bearish. We've got liquidity going in, and yeah, so it's been a bearish news day. So I'm sorry for that. Hopefully, Bitcoin's price can get that V-shaped week going again. Like we're currently still at 67,316. If we take a look at crypto bubbles right now, it's kind of mixed for the current cryptocurrency market out there. And yeah, we're still at a 13 extreme fear. So everyone, I hope everyone has an awesome Tuesday today. Just stay safe out there. Again, if you get a fake Trezor or ledger letter in the mail, it's a scam. Just rip it up, shred it, throw it away. It's garbage. It's just a letter trying to steal your money, so do not fall for it. So everyone stay safe today, and I'll see you again tomorrow with some more crypto news. Take care, guys.